and market movers. This is The Pulse with Francine Lacqua.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, investors turning to the Fed's annual gathering at Jackson Hole this week to see how recent data on the U.S. economy will inform the central bank's path on interest rates. Well, joining us now is Louise Dudley, portfolio manager for global equities at Federated Hermes, and Noor Alali, Bloomberg Markets Live editor and strategist. So thank you both for joining us. It's exciting. It's Jackson Hole, and we're expecting, I don't know whether we're expecting too much of Jay Powell, because out of character, I mean, he's not the one, Nor, that, will say this is exactly what I'm expecting, usually coy and cautious.
Yeah, absolutely. But look, we know from the last meeting that the Fed's Powell did say, September could be that month where we see cuts coming. Fed's Daily came out and said maybe, we are more comfortable with inflation figures coming out. And now I think the Fed will start now pointing to the fact that they may now look at their second mandate here, especially with the economy and the jobs market not doing as well as we had hoped in the last months. So that we're going to start seeing that maybe feed in from the commentary. And look, traders are just waiting for that opportunity or just that sign that the Fed's Powell will say, OK, yes, it will absolutely cut in September. And the moment they get that sign, it's just a rally for equities and bonds and, of course, a further declines for the dollar. And we're seeing that move materialize just as we start this week.
What are you expecting, Louise, in terms of, again, an indication? Is the market ahead of itself like it has been in the past?
I think it is. I think we've definitely seen the sentiment switch more because we moved to that potential 50 bips cut. The expectation is that there will be a cut. Whereas I think previously we were more of the expectation that it may not happen before the election, so that it may be put off. Whereas now people are definitely pricing 3 cuts, but I expect that it will be a stabilisation and they won't want to rock and go for the 50. But definitely the wording will be very important in terms of what comes out. People are very assertive in terms of trading these days, and definitely on the retail side, people are looking to get back in ahead of the elections.
Louise, do you think he'll be very cautious and actually committing too much like he has in the past? And why is it so difficult to model what the interest rate cut hikes have been doing to the economy?
I think in this period, in terms of the election, they have to be very, very cautious. And they know that Trump will jump on anything if he can. And so I think that's why there's that extra level of not wanting to be too extreme in any direction, but to also be clear and stable, as I said.
Nora, what does this all mean for treasuries?
Look, I mean, I'm still going to hold my opinion that bonds are back. I've been beaten one too many times by this call, but I still believe that, whether or not the Fed cuts by 50 or a quarter point, as Louise is pointing out, is moot, right? We are expecting the Federal Reserve to begin its easing cycle. The ECB has done it, the Bank of England has done it, and now the Fed is there. I mean, it's quite unusual for these central banks to do so before the Fed. So September seems like the kind of month where they'd say, OK, fine, we'll start with that small cut just to get markets thinking we're not behind the curve. And then, in November, when we meet just days after the U.S. election, that's where I think now the debate is going to shift. Do we get a consecutive cut from the Fed? And obviously markets are as well, really, betting on those 90 basis points of cut by December, we've pared back quite aggressively. We were expecting a full percentage point by December. Obviously, markets have really pared back those expectations. I do expect that we'll see a little bit more cuts priced in down the line, and that will ultimately feed into further gains for treasuries and bonds as well as a whole.
Louise, are you really confident that some of these fears around a U.S. recession are rightly eased? Because I know you have a couple of contrarian calls, but just in general, we talk about a Goldilocks scenario, but then it's kind of like out of whack 2 days afterwards.
Yeah, I think that we've seen the rebound come back so quickly that I think people reacted very quickly in terms of the sell-off. It's like end of day scenario. Things have come back. Things feel more measured now. We are still thinking, quality is important. A watch in terms of profitability is important. But, yeah, I think in that medium term, there is definitely some volatility, and we're definitely looking to take advantage of some of those price moves. But we do expect things to be a bit more stable, and obviously the overall trajectory, I think, is still positive.
So where are you buying right now tactically?
So I think, we've always been quite overweight in terms of the tech, some of the large cap names, and I think some of those names are still offering some of the top growth opportunities. We're not as overweight as we were. But overall, we still have a significant exposure. We also still have significant exposure in terms of that obesity trade, but looking to diversify, again, across that supply chain as well, because, again, some of those numbers did get quite hot. And so we're looking for more of those kind of medium-term names, but very much focused now into 2025, strong pipelines, etc., and the onshoring trade as well within the US, so that industrials. We do expect those names to do well post-election.
Nora, talk to me a bit about BOJ. Can it still spook, those yen carry trades that have been put back on? I mean, it's only 2 weeks ago that we had the market really fall out of bed.
Yeah, absolutely. And the Japanese stocks really bared the brunt of that move, right? This morning, though, you are seeing the Japanese yen extending its gains now up about maybe 1.5% against the dollar. So it's really interesting. We still don't know to what extent that carry trade has to unwind, right? There's a lot of calls out there that, it's maybe gone too far, too fast. There was some adjustment last week, but so far what you've seen is hedge funds have turned bullish on the yen for the first time since 2021. That is feeding that sentiment broadly for the yen. And also, you've got that conversation that we've just had about the Fed and how that will feed into more declines for the dollar. So that's also feeding the yen, the havens as well. You've got Middle Eastern tensions as well. So there's a lot that's going on there that's helping that yen really help unwind that carry trade move even further. I think it's got further to go, but perhaps at a more measured pace. And of course, you've got the Bank of Japan that may come out and say, well, look, if those declines in the stock market really trigger that kind of fear that we saw just a couple of weeks ago, we may not be as aggressive as you would expect us to be. So a lot more measured commentary I would expect from the Bank of Japan.
Louise, do you see any opportunities in either Japanese equities or Japanese assets?
So we are generally kind of underweight and definitely looking for those international names rather than domestic. I think it's hard because we don't have very good visibility into Japan and where they are going to be. It's definitely not the most attractive area for us. We're also very conscious of how it trades alongside China as well. And, China, the news just keeps getting worse and worse, it seems. And it doesn't seem that there's going to be that support from the top-down perspective. So, Japan very tied to that region. So, yeah, a little bit more cautious. That said, more on the kind of stable side. Definitely the large cap names continue to do well, invest a lot of money, which will filter down in terms of supply chains.
All right. Thank you both for joining us. Louise Dudley there from Federated, Hermes, and Nora Alali from Bloomberg Markets Live. Coming up, a big week for U.S. politics as Democrats head to Chicago for their national convention. So we'll bring you the latest next. And this is Bloomberg. So, big week ahead for U.S. politics with the Democratic National Convention kicking off in Chicago later today. Speaking in Pennsylvania this weekend, Kamala Harris was not pulling any punches about the battle ahead.
We know our country is going to be as strong as our willingness to fight for it and to fight for what we stand for. When you know what you stand for, you know what to fight for.
However, Republican Senator Lindsey Graham was less than impressed, questioning Harris's economic policy.
She's going to the Soviet Union playbook to lower prices called price control. She wants to eliminate private health care. She's for reparations. She's against fracking. She's for the Green New Deal, on and on and on. So I would make it about policy. A nightmare for Harris is to defend her policy choices.
Well, let's bring in Bloomberg's Vonnie Quinn in Washington, D.C., and Stephanie Baker here in London. So thank you both for joining us. Vonnie, you're there. You're where the action is. What do the Democrats need to get out of this week?
Well, Francine, I would suggest that the momentum needs to continue to build, right? And if possible, for the Democrats to bring in new voters, potentially voters that will see what percolates out of the Chicago DNC, see Kamala Harris, who's presenting herself as a sort of a change election candidate, and see what she can bring them. Already we know that polling is directionally good for Democrats right now. It's in terms of favorability, Kamala Harris is really blowing it out of the park. Also in terms of in some key swing states, she is now edging Donald Trump in terms of polling. So Democrats will want to continue that momentum. We know that traditionally after the DNC, Democrats get a boost of about 2.1 percentage points. That's at least since the year 2000. They'll want that to continue. And just generally for Kamala Harris to also fundraise as well, right? There are a lot of events that are taking place in Chicago around this time. John Legend, Julia Louis-Dreyfus, they're all raising more money because 10 weeks, it's not that long, but if you're spending hundreds of millions of dollars and she's already pledged $370 million in advertising, well, that money needs to keep coming in.
Yeah, and Stephanie, I guess there's been a lot of talk about, Tim Walz, her vice president candidate, and he seems to be well liked. He has this kind of Midwestern dad feel about him. But how good does she need to be in that speech on Thursday to really land it with the audience?
Yeah, I mean, for many voters, this will be the first time they really hear from Kamala Harris. I think we forget that a lot of people aren't as tuned in. So this will be her moment to deliver a big kind of values message, introduce herself to the electorate. She already rolled out an economic policy speech last week, which was criticized in a number of quarters. So she doesn't have to, load that speech with policy ideas. She can focus more on kind of telling her story and outlining her values and vision for the country.
Stephanie, we're just looking at pictures there. I think that came from Instagram from Tim Walz of him handing over Doritos for the road trip. I mean, does the social media kind of relatable work? Is that going to win the swing states?
Tim Walz is so good on social media. It's just incredible. He's even better than Kamala, on Instagram and TikTok. So I think he's got a lot of. He'll help her with those independent voters where she is weak. She's rebuilding in some ways the Obama coalition of 2008, but she's weaker with white men and those independent voters in swing states. So she's got to figure out a way to pull ahead on that front. And I think Walz is a key person that can help her do that.
Vani, Senator Lindsey Graham was basically saying stay away from personal attacks and focus on policy. Are we going to see a different Republican ticket?
Well, that's the question, Francine. It's actually quite interesting because the fact that he had to say that, and Donald Trump basically told his supporters as well that his aides were telling him not to go for the personal, to concentrate on policy, and he was sort of complaining. It shows how ununified the Republican Party is right now, right? It's a stark contrast to the unity message that the Democrats are putting out. Yes, of course, we're going to see attacks on policy. We have, as Stephanie said, already seen many attacks, most of the attacks actually on what Kamala Harris has come out with in terms of economic policy. But it's very interesting to see what Donald Trump's campaign has planned for this week, because there were no plans in the works, and suddenly he's now going to 3 key swing states, and in a couple of them Kamala Harris is actually leading in the polls, not statistically significantly, but nevertheless leading. North Carolina, for example, and also right now Pennsylvania, interestingly enough. He's also going to go to Michigan, but then on Thursday, the day that Kamala Harris actually formally accepts the nomination from her party, he is going to the border, which is where she's really perceived to be weak. He will be in Arizona. Right now, Kamala Harris is actually polling higher than Donald Trump in Arizona. She is about 5 percentage points, according to the latest New York Times Siena poll, which was just taken a few days ago. So that is fascinating. Arizona, by the way, also a state where abortion rights are going to be on the ballot. There are now enough signatures for that. So there's a lot of interesting dynamics going on in some of these, particularly Sunbelt swing states.
Stephanie, do you trust the polls? It feels like, 2-3 weeks ago, everyone was saying it's going to be really difficult for Kamala Harris to actually win this. And now the bets are that she's got this. Or is it too kind of volatile?
I think it is still too early. As we've seen from the past month, things can change, events can happen that, flip the script for both candidates. She still hasn't done a major interview. She's expected to do that after the convention. And I think that'll be a real test. The debate on September 10th is another potential turning point. And remember, the Democrats need to win big in order to win the Electoral College because of the way the Electoral College works. So, she needs to pull ahead by, well ahead percentage-wise in order to secure enough Electoral College votes to win the presidency.
Vonnie, how will Harris respond to these pro-Palestinian demonstrations scheduled all week?
Yeah, Francine, she obviously has already sort of told protesters in Washington, D.C. when Benjamin Netanyahu was here that she hears them and she sees them. But she is also very firmly supportive of the Biden administration stance on Israel. So we will have to see if she says anything publicly, if she, stops at some points to talk to them potentially even. We know that there are going to be demonstrations outside the Israeli consulate Tuesday night, for example, and there's a large march planned for this week as well. And those protesters will be loud. They have permission for loudspeakers and a stage and so on. At the same time, Kamala Harris told them that time in Washington, D.C., if they get rowdy or disruptive, she is not interested in that. And we know that she's constantly calling for a ceasefire. She is very well aware of the humanitarian plight of Gazans. And, it will be very interesting to see how the dynamics play out. She's bound to have to make some kind of a statement about the protests during the week.
And Stephanie, I'm excited about your book, which is basically on the Russian economy and, the fact that Vladimir Putin changed the economy to go to war. There was a bizarre exchange where Donald Trump said he spoke to Vladimir Putin saying you shouldn't do this. This was in the past when he was president. Does that war play out in the U.S. election?
I think U.S. voters are not as focused on foreign policy, but I think it will be one of the key foreign policy issues in addition to Israel-Gaza. My book goes into the Biden administration's policy response and how they tried to implement sanctions to slow down Putin's war machine. That's a huge dividing line between Trump, who said he wants to end the war in a day, which will likely mean the lifting of sanctions, and the Harris camp, who I think is going to follow the Biden administration policy of staying tough on Russia and keeping those sanctions in place. I think it's going to come up at the debate. Yeah. On September 10th, I think they're going to cover foreign policy, and that will be a key dividing line between the two candidates.
Very quickly, because it also reminded me, Vladimir Putin in an interview said that he'd rather Donald Trump not be president. I mean, do we know what his preference is right now?
I think he's trolling. I don't think we can really trust what Putin says. He's got an agenda. I think he views Trump as unpredictable. I think he would rather have Trump because he knows that Trump is not as supportive of the sanctions, and J.D. Vance, for instance, has been very against aid for Ukraine. So I think it's pretty clear who Putin would really want in the White House. He does not want the current Biden-Harris policy to continue.
Thank you both for joining us, Stephanie Baker and Vonnie Quinn. Now, coming up, Israel and Hamas trade blame for impeding a ceasefire deal. Meanwhile, U.S. State Secretary Antony Blinken presses for agreement, meeting Benjamin Netanyahu today. That's next, and this is Bloomberg. The conversations that matter, the insights you need. This is The Pulse, and I'm Francine Lacqua here in London. Now, let's quickly look at some of the cross-asset checks that we should do on a daily basis. First of all, STOXX posted small moves after last week's risk-on rally. Again, traders are waiting for signs on the scope of potential interest rate cuts from the Fed. S&P futures practically unchanged. You can see U.S. 10-year 38635 and then yen 146.13. Coming up, we'll be speaking to Jinny, Chief China economist at ICBC Standard Bank, on concerns about an uneven recovery. This is Bloomberg. Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. Wall Street is betting that the Fed Chair, Jay Powell, will confirm rate cuts are coming at the central bank gathering in Jackson Hole this week. The U.S. Secretary of State Antony Blinken is expected to meet with the Israeli Prime Minister Benjamin Netanyahu in Jerusalem this hour to press for a hostage and ceasefire deal with Hamas. Plus, U.S. Vice President Kamala Harris heads to Chicago to officially accept her party's presidential nomination at the Democratic National Convention. So back to one of our top stories, and Israel and Hamas are blaming each other for impeding a ceasefire and hostage deal. Now, this comes as Antony Blinken has arrived in Tel Aviv to press for an agreement. Now, the U.S. Secretary of State is on his 9th visit to the region since war broke out last October and is set to meet with Israeli officials before traveling to Egypt. Well, for more on all of this, let's bring in Elisa Odenheimer, Bloomberg's Israeli breaking news editor. Elisa, thank you for joining us. So what exactly is at stake in the negotiations?
Hi, Francine. Good to be with you this morning. Well, if you remember, on October 7th, Hamas invaded southern Israel, killing about 1,200 people and taking 250 people hostage. Now, since then, some of the hostages were returned in an earlier ceasefire deal in November, but there are still about 115 hostages there. About 40 have already been declared dead, but the rest are assumed living. And these hostages include, in fact, 2 small children, one a year old and another 5 years old. They include people in their 80s, and of course other people who were wounded in the Hamas attack and so on. And so there's quite a bit of worry about their state of health. And so that is one part of the deal. The other part is the ceasefire for Gazans. You know, many who have been displaced from their homes and so on, and are living in temporary conditions. They're living in very difficult conditions. The ceasefire for some of them would mean that they could return home, and that's another part of it. Now, of course, Hamas is not willing. Of course, the deal doesn't ask Hamas to let the hostages go for free. The other part of the deal is that Israel would have to let Palestinian prisoners, many Palestinian prisoners, it said reportedly 50 prisoners per hostage out of the prisons, and many of these people are convicted of murdering Israelis in terrorist attacks. And that could be very, very difficult especially for the families of the victims of those people. So these are all some of the things that are at stake.
Yes. So does it look like the sides will actually reach an agreement? And what happens if they don't?
Well, it's very unclear at this time whether or not they'll reach an agreement. On the one hand, there was a summit in Doha at the end of last week. And afterwards, Prime Minister Benjamin Netanyahu said that the Israeli negotiators were cautiously optimistic. On the other hand, he also has said since then that Israel is not willing to give, and that Hamas is being intransigent and obstinate. And Hamas, for its part, is, of course, saying that Israel is not playing fair, and that it's asking for more and more conditions. Now, one of the big items in being negotiated is the Philadelphia corridor. That is a road that runs between, basically on the border between Gaza and Egypt. And according to Israel, much of the weapons that Hamas has came in from across that underground tunnels across that corridor. So Israel is asking to hold on to it even during the ceasefire, and Hamas is reportedly not willing for that. And then another big problem is a road that runs in the middle of Gaza, across the middle of it. Hamas wants those who have been displaced from the north to be able to go back to the north, and Israel does not want to allow people to go back without being checked by the army, and Hamas is not willing to allow this, reportedly.
Alisa, thank you so much for that. And of course, this is a story that we'll be following very closely throughout the day. Again, as Antony Blinken has also just arrived in Tel Aviv. Alisa Odenheimer, Bloomberg's Israel Breaking News editor. Now on to China. And its president says he wants to build strong ties with Vietnam as the country's leader visits Beijing to discuss trade. It's happening as economic data released last week reinforced concerns about sluggish growth in China. Well, Jinny Yang, a chief China economist, the ICBC Standard Bank, joins us now. Jinny, so good to speak to you. There's been so many questions on China, whether we're misunderstanding it, whether there's more weakness than actually the markets even think. What do you see as the main worry in China right now?
Well, there are lots of concerns about China for sure. And that really is telling us it's becoming more and more difficult to observe China and actually get a true sense of what's happening on the ground. In the latest official data, we saw some weakness, but very much anticipated. So in fixed asset investment, obviously we know housing slowdown is still present. We know industrial production, although there's a lot of government-related spending and local government bond issuance going to that. But the impact of that may have a lagged effect between 6 to 12 months down the line. We also know the recent credit data. So banks are not lending, not because they don't want to lend, but because there's not enough demand for credit. So that's why we need to look at other data. So we are continually looking for new data, particularly high-frequency data. Recent examples including copper-related commodity-side data, which is showing us maybe there are marginal pickup in demand. But 1 month of data does not make a trend. So we're obviously observing, especially heading into the very active Q3 before the National Day holidays, whether we can see new signs or maybe some vibrancy and activity in China.
But, Jenny, so how much do you worry, for example, about this home inventory glut? Because it seems, there was a rescue plan, right? China came in, policymakers saying, look, there's a housing market rescue plan, but it doesn't seem to be going as well as expected.
Well, it's not going to be easy to observe the success of this plan because it's not driven by a central government, it's actually local government. So each city has its own plan in place. So imagine the multiplier effect of all of these cities with its own actions. And obviously the desired effect is to lift confidence. It's not to resolve the problem because actually China's transitioning away from the housing and property sector-led growth towards other fixed asset investments such as infrastructure, new energy, new economies. So this is what we're observing, and this is a transition that China necessarily has to go through in the coming decades.
But is there a danger that actually the transition, just doesn't happen the way it's meant to, or is it just delayed?
Well, this is the difficulty, I think, is the external environment. I think China has a plan in place. The difficulty, as we just saw in your previous story, is that geopolitical tensions around the world is making China's transition more difficult. Global trade will be impacted. Look at these trade corridors, particularly with the Middle East. That will have an impact and a delay on the desired effect of this consumption-led transition towards consumer-led growth.
Jenny, there's a lot of questions, of course, about, China possibly seeing its first yearly outflow from equities in 2024. Is this a concern per se, or is it symptomatic of will policymakers step in and really try and stem that outflow?
Policymakers have made it very clear in recent policy speeches. In the third plenum, also we had Governor Pan talking just last week. The effort is about continued gradual transition, stable growth, and the two key words are incremental, so not a big bang approach, but also the implementation of existing policies. So whilst all this transition is going on, I guess the policymakers are just asking for patience. And as investors, of course, we're just impatient, especially with so much volatility happening in the global markets. But for China heading into 2025, there will be a very steady reaction. There will be no panic button being pressed because at the moment, moment, data is not bad enough to push any of those patterns. So what I would say to investors is really to look across asset class. China will continue to be an anchor for stable growth going forward. But probably the transition means that growth will come down on an aggregate perspective, but from sector's perspective, there are still plenty of opportunities, especially if we factor in that RMB-denominated assets are becoming more and more of a safe haven asset for the global markets.
So, Jinny, when you look at consumption, are there any bright spots where you see even consumption actually, picking up relatively okay?
Yeah, if you look at summer months, domestic tourism. Tourism in China is still booming. I would say the activity data is showing us that domestic and also increasingly regional tourism has been actually very positive. So I think there's still plenty to come, but obviously people rather save than spend for now.
Jinny, thank you so much for the terrific roundup on China. Jinny Yang, Chief China Economist at ICBC Standard Bank. Now, coming up later, warnings over safety at a Russian-occupied nuclear plant in southern Ukraine after a drone strike. This as Kyiv continues its incursion into Kursk. We'll bring you the latest, and this is Bloomberg. The International Atomic Energy Agency says safety at a Russian-occupied nuclear power plant in southern Ukraine is deteriorating. That's after a drone strike on Saturday exploded about 100 meters from the plant's only remaining power supply line. Now, for more on all of this, let's bring in Bloomberg's Tony Halpin. Tony, thank you for joining us. How big a blow is it to Ukraine's war efforts?
Well, this is Europe's largest nuclear power plant, so anything that goes on there that risks security is of deep concern, clearly, to the International Atomic Energy Agency. And its director has said that he's extremely concerned by what's going on and is urging all sides to show maximum restraint. This power plant has been very much on the front line of tensions between Ukraine and Russia ever since the early days of the invasion. Russia occupies it, but it's very close to the front lines. And Ukraine clearly wants to regain control eventually of that plant. It says that's the only way to ensure security. So the incident has been concerning to the monitors at the station, and they're sounding the alarm that this needs to stop.
Yeah, Antony, at the same time, I mean, there has been, of course, we're, I think, in week 2 of this Ukraine incursion into Russia, and there were many questions about why now, what's the end game? And we have learned a little bit more about it in the last couple of days.
Yes, Ukraine's President Zelensky said that the aim of this incursion is to establish a buffer zone, as he put it, inside Russia to protect Ukrainian people living inside the border in northern Ukraine. And clearly the implication of that is that Ukrainian forces intend to stay to safeguard this buffer, and that's a challenge for Russian troops who are trying to push them back. There have been reports this morning of a series of bridges over a key river in that area being destroyed, and that's going to make it very hard for Russia to keep its troops resupplied as Ukraine tries to push on.
Tony, thank you so much. Tony Halpin there with the very latest on Russia and Ukraine. Now, a German newspaper is reporting that the government will no longer grant new requests for aid to Ukraine. That's as Berlin seeks to rein in spending. Let's get more from Bloomberg's Oliver Crook in Berlin. Ollie, good morning. So how big of a blow is this to Ukraine's war efforts and defense companies in Europe?
Yeah, Francine, so listen, you're seeing the sell-off across the defense sector here in Europe today as a consequence, we understand, from this reporting, basically, which is what it's come down to is that the Germans don't have the money to spend on everything. And one of the things that they have had in their budget negotiations is to not give any more money to Ukraine. So we had the Defense Ministry, Boris Pistorius, requesting an additional 4 billion euros to go to Ukraine going into the future. You have Christian Lindner at the Finance Ministry saying, no way, we cannot do this anymore. We are not going to give any new money to Ukraine. And this is obviously very significant for a number of reasons, Francine, not least of which because Germany is the single biggest contributor in Europe to Ukraine, second biggest in the world after the United States. But it also sends a rather strong signal to not only allies of Germany, but also to adversaries, say in Moscow, if they're sort of unwilling to go further and give additional money to Ukraine. And remember, Francine, this has all of its sort of roots back in that sort of constitutional court ruling last year where the Germans just don't have the money that they thought that they had. The question is, where does it leave Ukraine? You still could have some sort of funding coming from at the EU level. However, even that, you know, a lot of these economies, whether it's France and Italy, are sort of strapped for cash, so maybe don't have the flexibility to do what they'd like to do. But again, when we think about the impact on the markets there, you can see the sort of downturn on a number of the stocks there. This does not affect Germany's own military spending, which is actually a different fund, 100 billion euros that they established off budget in order to build out their own military. So maybe a little bit of a positive sort of tailwind to some of the negative headlines for the defense sector this morning.
So, Ali, the German economy is also struggling. The budget, of course, is a problem. How will the government manage in other parts of the economy?
Yeah, so the big problem that they have here, Francine, is that you have three governments, three parties in government, and all have very different ideas on how to solve a lot of Germany's economic problems. The good news right now is that they seem to have a sort of draft budget agreed across the three major players. Of course, the socialists and Scholz, they're really going to emphasize welfare spending and the welfare state. The Greens want to use a lot of this money for the energy transition, and then, you know, the FDP want less regulation. They want really less spending. So that's the sort of good news. The bad news is that their priorities are still fairly wide apart. They haven't actually got the final agreement on this budget. There's still a 12 billion euro hole in there. So it'll be interesting to see, because this now is going to be debated within the Bundestag in terms of where this sort of conversation starts going. I think what's interesting is when you take it back to Ukraine in the political context within Germany right now, the questions that are being asked by a lot of people on the far right and the far left is, if we have all of these major economic problems at home in Germany and Germans are suffering, why are we sending so much money to Ukraine? Why are we taking in, you know, they took more than 1 million refugees from Ukraine? And that's the political discussion that's really coming into sharper relief, Francine, over the next couple of weekends, because you have state elections across the east of Germany where you have a lot more of these radical parties that are going to do quite well.
Meanwhile, Ollie, the mystery around Nord Stream 2 still has not gone away, now causing some tensions between Germany and Poland.
Yeah, Francine, I mean, it's almost 2 years ago now. It was September 26, 2022, when that Nord Stream pipeline, we sort of woke up, it had blown up. There were a huge amount of questions about who did what. And, you know, there's still a lot of mystery that's sort of shrouding it. What has become interesting for the Germans now is that they have finally put out an arrest warrant on a sort of Ukrainian national that had been living in Poland. And so obviously that raises a lot of questions, and it raised a number of questions by the former head of the German sort of intelligence agency, saying that basically there's no way, he said, that the Ukrainians were not sort of behind it and authorized at the top level, but so too the Polish. Now we have had a sort of warm, cool denial from the Polish, but then you had Tusk come out on Twitter. This I thought very interesting over yesterday, saying basically that all the initiators and the patrons of the Nord Stream 1 and 2, the only thing you should do today is apologize and keep quiet. So not really a full-throated denial that Poland had any knowledge of this. This, of course, doesn't mean that they did, but it's interesting that he's taking a sort of more combative tack, particularly on something that is so sensitive, obviously just off of the shore of Germany, blowing up that pipeline 2 years ago.
Ollie, thank you so much for the great context. Oliver Crook there with the very latest on Ukraine and Germany. Coming up, back in demand. Well, here in the UK, real estate agents see a pickup in property inquiries after the Bank of England cut rates earlier this month. We'll discuss that next, and this is Bloomberg.
This week, Balance of Power is live in Chicago for the Democratic National Convention.
So we've got a race here, and the sprint begins.
We'll bring you breaking developments.
Vice President Kamala Harris closing the gap with Donald Trump.
And informative analysis, all leading up to special coverage Thursday evening, including Vice President Harris's acceptance speech as the Democratic nominee for president.
As president, I will show Donald Trump what real leadership looks like.
Tune in all week on Bloomberg Television.
Welcome back, everyone. Let's talk about the UK's national obsession, property prices. Prospective property buyers in the UK appear to be wasting no time as they look to take advantage of the Bank of England's first interest rate cut since the pandemic. Now, a survey by Rightmove today highlighted more potential buyers had contacted estate agents since the recent rate cut. Let's bring in Tom Metcalf, our EMEA finance managing editor. Tom, this is kind of exciting, right, if the property market is doing okay, but there's nothing tangible at the moment. It's people kind of calling up and saying, I'm interested in moving or I'm interested in buying.
Yeah, exactly, and that's why these portals are quite fascinating, because they do almost offer like a leading indicator in terms of what we might expect, when the property market really starts going after the summer lull. And what they're saying is they've seen in August a 19% jump basically in prospective buyers, which would bode well for the housing market in terms of if you want those house prices to keep on rising. And that's, it's all basically driven by the Bank of England's rate cut back in August or earlier this month. And so it's a sign that, that is a bit of a momentum shift. We might well see, kind of a bit more of a return to animal spirits in that space after a couple of moribund years.
And so do we know anything about asking prices? Is there any more if this is positive news, where does it also come from?
Yeah, asking prices ticking up. Again, as you say, it's sort of asking prices rather than for sale. It's really very much sentiment driven. And the interesting thing here is normally in August you're seeing sort of a complete lull. So the fact that people are out there looking at things suggests that, as September, October come around, that there will be, might be quite a lot of activity.
It's pretty incredible that it's that quick, right? I guess the interest rates have gone up by so much, and so people worry. And as soon as that cut, there's like animal spirits back.
Exactly, and I think that's probably, to your point, it's very early days, but it is just a sign that everyone's really kind of keyed into this, and maybe they were just looking for that momentum shifter. And of course, the other thing to think about is, there is an expectation that Bank of England will cut again. Yeah. So, perhaps a lot of this is sort of kind of looking forward and more hopeful than sort of anything too solid.
Yeah, and maybe a lot of people didn't move for a long time because of that interest rate increase,
absolutely.
Right? Tom, as always, thank you so much. Tom Metcalf there for breaking it all down for us. Up next, Bloomberg Brief, Danny Berger and Manus Cranny in New York, and this is Bloomberg.